Let's go ahead and start reconciliation of our bank account and credit card account for the month of February. So we're going to start with our credit card account. Make sure that's selected right here. All right, ending balance. All right, again, this is an opportunity to enter a transaction, a finance charge in this case, right at this interface. So again, we're going to make sure we understand what's going on. So our finance charge is $27.71. And our date is end of the month. Excellent. Interest finance charges. So on this interface right here, we're actually entering a transaction. So I want to make sure we understand what's going on. You have your accounts right here. So it's our liability account, 21,100. And we have our expense account for the interest expense of 61,700. So what just happened? Well, we know for a fact that interest expense went up. We can work it that way. So 27.71, that's how much money we paid of the interest for borrowing the money from the credit card company for the month of February. So right here, this window, again, we enter amount once because it feeds into both accounts, but we know that for this account, 61,700, it's a debit. What else just happened? Well, we know we have to credit it because it's an offsetting entry. That's one way to work with accounting. So, and it makes sense because 21,100 is a liability account and it went up, right? We basically incurred expense of finance charges because we borrowed some money, but we didn't necessarily pay it, so it first got added to our liability account, to our total debt. So our debt went up. Again, right here, this amount becomes a credit, right, for this account. And at the same time, this amount becomes a debit for this account, and that's depicted right here. So we're going to click continue, and once we do that, that will book that entry. All right, here we are. So we can see that some of our entries are posted. So we can see that our finance charge that we just booked is posted right here. We can click that as reconciled. What else do we have? We have our payment, right? Everything seems to match. And then we have transactions, right? So let's go ahead one by one. Perfect. Voila. 72. We have our mobile services right here. And another gas station receipt right here. Okay, doke, and the difference is 0, which is what we want, right? When we reconcile, that's the objective. We want to get to 0 right here, and we did. So we're going to click reconcile now. We're not going to write the check for payment now. We're going to enter the bill for payment later. That's a credit card. That's a great another feature that QuickBooks does. They want to make sure that they're very user-friendly. But in this case, we're booking everything after the fact, after the year, and so we're going to enter it later. Okay, even though it still brings it up as a bill, I'm going to close it after we're done with this interface. And what this interface does, it says, do you want to print reconciliation reports? So we're going to just display them, and I just want to show what's going on and why they're important. And you can print them for your records, right? So our ending balance, does it match? Yes, it matches right here, right? And it matches to our statement, so we did good on reconciliation summary. What about reconciliation detail? Well, the payments, right? Yep, they match right here. And then our transactions, right? They're all right here. So we did a good job reconciling. Everything is there. We're going to close this bill. We're not going to enter it right now. Do you want to record it now? No, we don't want to record it now. And at this point, we're done with reconciliation of our credit card statement. Okay, let's go ahead and reconcile our bank statement for the month of February. Here it is. We're going to go into banking, reconcile, make sure we select our bank account. All right, statement date is correct. What's our ending balance? 3,936.68. This is an opportunity to enter service charges. We can go ahead and enter them right here. So we have monthly service charge of $25. Again, this is one of those situations where you actually, we can modify the date too, where you actually, once you click continue, you will book an entry, right? So let's go ahead and make sure we understand what entry we're booking, what is being debited and what is being credited, right? So we know we have two accounts affected right here. One is here, one is here, right? So again, very important to understand what's happening behind the interface. QuickBooks does wonderful job creating user-friendly interfaces. However, very important to be good bookkeeper, to be good accountant, very important to understand what's going on behind those interfaces. So the $25 is a service charge. It reduces our bank account. They charge us money. So we know bank accounts is an asset and they're reduced when they're credited. So we're going to enter it right here. And our expense for bank service charges goes up as well. And expenses go up through debits, right? So what's going on in this interface? This transaction right here. This amount is, although entered only once, it impacts both accounts, right? It impacts 11,100 right here, and it serves as a credit, and it impacts 61,600, and it serves as debit for that account. So let's go ahead and click continue. All right, so we have some of our transactions that we can see here, and some of those we might have to post, right, while we're reconciling. And again, the beauty of QuickBooks is that you don't have to exit reconciliation while you're posting additional entries, right? The ones that you're posting off the statement, as the saying goes. And it is very typical to post some entries from the statement just simply because you didn't book them during the year, during the cycle, during the month. Okay, so what do we have here? Let's reconcile what we have. We have the checks, and the check numbers match, and the amounts match, so that's excellent right here. We can go ahead and check those out. We also see that there's our bank transfer for the credit card payment. We can go ahead and do that. And now we have deposits, right, that we have to post. And let's go ahead and start with those. So we're going to be posting deposits. All of these deposits are sales, they're revenue, and therefore we should get through it pretty quickly. So we're going to go into make deposits. Again, the wonderful feature of QuickBooks is that we don't have to exit reconciliation. We can do it all out of this while in the reconciliation. Then we'll see once we're done posting deposits, they will show up. So let's get started. All right. So what happened here? We're depositing our cash sales, right? So on February 5th, we had some cash in excess of what we want to keep on hand, and we took that money and we deposited it into the bank. So what happened? Our bank account went up, and assets are increased through debits. And our sales account, or revenue account, whatever you prefer to call it, in this case we call it sales, went up. And revenue or sales account go up through credits, right? So here we are. So again, just so you understand, even though we're entering amount just once here, right? What happened is this amount impacts both accounts, 11,100 and 41,100, sales and the bank account. And again, bank account goes up because it's an asset, it's debited, and our sales go up as well because they're credited, and that's how sales accounts are increased through credits. All right, so here we are, entries in balance, save and new. Let's go ahead and post our next deposit. I'm going to go ahead and leave the account numbers. I'm not going to clear them just simply because, again, we're going to go through quite a few of those deposits, but I want to make sure that you understand what's going on behind the interface. That's why I'm going to do it for every single time. So here we are, balance, everything is in balance, we're good to go. Again, we're not clicking the box yet because we're not reconciling them, we're just posting them, right? Now that's our merchant, right? So it's our customers, receipt from sales. Again, merchant account is money that we receive from our customers that paid using credit card, and we have our credit card processing service with our bank that's called merchant service. So what they do is they execute those transactions and then they transfer money to us. So in our case, they transfer it twice a month, in the middle and at the end of each month. So this is our mid-month transaction. Again, let's make sure we understand all the impacts. I'm going to do it here real quick. Okay, so what just happened, we essentially debited our bank account and we credited our sales account. Sales went up, bank went up. All right, everything correct, so everything is in balance. All right, so let's go ahead and post the next one. Good, everything is in balance. So then, okay, we have another cash deposit, which is very typical. Some of the sales are done in cash, some of the sales are done using credit card, and therefore we deposit some of the money ourselves, we bring it physically to the bank, and some of the money is transferred to us from our bank merchant services, right? They receive it from our bank, from our customers' banks as credit card transactions get processed, and they get routed to our bank. So again, let's make sure we understand what's going on behind these deposits. They're all pretty much the same. I mean, they're identical in the way they're handled, but I still want to go through it just so you guys understand all the details, all the debits and credits behind the scenes. Very important, right? Because otherwise, you don't really see debits and credits here. It might be a little bit confusing, but once we know, once we understand it, it's all good to go. And we have one more that we got to post, and that's going to be our merchant account deposit, end of the month. Alright, we're good. Okay. Okie doke. So what do we have? We have $3,893.79 routed from our merchant processing services into our bank account. And bank account is debited, goes up, and our sales are credited, right? Because sales are increased. We recognize them. We're good to go. Let's go ahead and save and close this one because we're done posting deposits. Save and close. Let's go ahead and clear this. Again, the beautiful part of QuickBooks, look, they're all here. We didn't have to exit reconciliation. Now we can reconcile the deposit portion. All right, here they are. Wonderful. Did a good job on those. Did a good job on those. Okay. but we still have a difference, right? We have a difference of $6,212.38. Well, it makes sense. They're right here. You see these boxes? They haven't been posted, so we got to post them. What do we have here? Well, we have transfer to personal checking. We have cash withdrawal. We have personal check and transfer. Those are essentially member draws. So the owner of the business takes some money out in order to spend it on personal needs, whatever they are, and therefore we have to book it. And then we also have monthly service fee, which is actually right here. So we can go ahead and click on that. And then we also have merchant account fee that we have to book. So we got to book 4 transactions to bring our reconciliation and balance, hopefully, right? It has to balance. We need to bring this difference to 0. And if we don't have it at 0, we got to make sure we understand why we don't. So let's go ahead and book those. We're going to book those using one of my favorite tools, and that's general journal entries, right? The reason I love them is because you can actually see debits and credits, right? And that's one of those opportunities where you get to see what I show you in those tables. So that's going to be our draw. Again, let's start with the simple part. What do we know? We know our bank account is reduced, and we know that assets are reduced through credit, so we're going to credit it right here. So again, it's going to be member draw. What it does, it reduces equity. So let's go ahead and show it right here, although everything is right here on general journal entry interface. It's basically depicted, right? It's very straightforward, but I still want to reflect it, right? Unlike other interfaces, it's easier. So what happens, right? Our equity account, right? The member's equity account is debited. Debits reduce those, right? So our equity, our ownership in the business has reduced by $3,000, which makes sense, right? Because we took $3,000 and we took it out of our account, our bank account, and we took that money and we use it for personal needs. It's no longer in the business, and therefore it reduces our equity in the business. So here we are. This is the transaction. Everything is actually depicted right here, and so we can go ahead and save in new. Okay, and the next one is also a draw. Okay. Okay. Okay, we know our bank account goes down. Again, it's a good reinforcement, right? It's very important to remember debits and credits, right? And that's what we have here. Here we are. It's all depicted. We just finished booking this 500. Save in new. Okay. One more. Okay. Uh-oh. Here it is. And voila, right? We have it. So we just booked the draw again with general journal entry interface. The cool part is that credits right here, debits right here. You can see it, and again, I'm just mirroring it right here just so that we're consistent, right? So we're gonna save in new. And then let's clear content. All right, and we have one more. We have merchant account fee. That's the amount of money the bank charges us for processing those credit card payments from our customers. So it's going to be, let's call it merge fee. All right, so again, the first portion is very much the same. We know that our bank account is reduced. All right. And we also know that our expenses going up and our merchant account fee expenses going up. So again, in this case, with general journal entry interface, it's pretty straightforward, but I'm still going to do it just for consistency. All right, see, it's in balance. Everything is in balance. Debits, credits, we're good to go. We're going to save and close. That's the last entry that we're booking. All right, what do we have here? Well, we see they're showing up right here, so now we can go ahead and reconcile them. So here's our 3,000. Here's our 500. Here's our 2.5. And here's our 212 and 38. And voila, we have 0 difference. That means we did a great job reconciling. Let's go ahead and click the button. All right, let's go ahead and display both. All right, ending balance. Yep, matches 1 for 1. So you can print it for your records and attach it to the statement. What about the details? Let's take a look. So our deposits, yes, they match. All right, what about our checks and payments? Let's take a quick look. Reconciliation, yes, everything matches. So you can see everything is here. We're good to go. We're finished with the month of February.